US Senator Elizabeth Warren wrote on Twitter that the collapse of one of the largest crypto platforms shows how much of the industry appears to be smoke and mirrors. We need more aggressive enforcement, and I'm going to keep pushing the Securities and Exchange Commission to enforce the law to protect consumers and financial stability. This is of course referring to the recent collapse of FTX, which I'm going to share my thoughts on. I'm not going to discuss the specific technical reasons as to why FTX collapsed because I don't think it matters. The bottom line is that the executives of both FTX and Alameda Research made some very bad decisions which exposed both companies to excessive amounts of risk and ultimately ended with the bankruptcy of both companies. But that in itself is the first point I want to discuss. The crypto industry is the Wild West, and many of the projects within it are run by cowboys. FTX is just another addition to the ever-growing list of disasters within the cryptocurrency space, right alongside Celsius, Voyager, and Terra, among others. All of these collapses were the result of bad and frankly non-existent risk management on the part of the individuals who ran these projects. Elizabeth Warren is right to describe the industry as smoke and mirrors, because that's what it is. Nobody really knows what's going on behind the scenes, least of all regular people like you and me. We'll talk about the people who lost money as a result of the FTX collapse in just a moment. But the reality is that anyone who is putting their money into crypto using any third-party provider is essentially blindly putting their money in the hands of individuals who are shady. Then you might say, well, isn't it the same thing for stock market investing? The answer to which is no, it's not. Stock market investing is heavily regulated in every developed market around the world. Regulators have total oversight over financial institutions offering stock investment services. Collapses like this in 2022 don't happen in the world of the stock market. There have been multiple multi-billion-dollar collapses in the crypto space in just this year alone. So you can't sit there for a second and try to convince me that the lawlessness of crypto is anywhere near comparable to the highly regulated and trusted practice of stock market investing. It's a lunacy argument that shouldn't and won't be entertained. The way I see it, the people who are leading the charge in crypto are software developers, coders, people who have little to no experience in creating and operating financial products that are safe for consumers and the wider financial system, nor do they probably care or assign value to either of those things. This is why it's so important that we regulate the living Jesus out of every aspect of this industry. I'm talking about not only total oversight over all corporate activity, but also much stricter rules on who can act as an executive for these companies, the activities that the company can carry out, and the licenses that the companies or projects require to operate, among a whole other pile of regulations. People who say that regulation goes against the whole point of crypto, DeFi, and blockchain technology are living in fairy tale land. I couldn't care less about the principles of what crypto stands for. If it's going to be bought and sold by regular people all around the world as a financial product, then it needs to conform to the standards which apply to all other financial products. End of story. Let's talk a bit about the people who lost money because of FTX and other crypto collapses. FTX now has a big banner on their website that says that they are unable to process withdrawals. In other words, you can't get your money out. I've seen estimates that between $1 and $2 billion worth of customer funds have, quote, disappeared. Obviously, this is terrible for the people who have very likely lost whatever they held on FTX. However, I'm not going to sit here and say that none of this is their own fault. If you are putting money into cryptocurrency and the platforms which facilitate such, you are effectively signing an agreement with yourself that you accept all of the risk that comes with cryptocurrencies. Many people just see this risk as the fluctuations in the price of the crypto which they buy, if they even think about it in the first place. But in reality, you are not only accepting the risk of an asset class which is extremely volatile, but you are also accepting the risk of an industry that is in its infancy in every way imaginable. Subpar regulatory oversight, endless amounts of unknowns, complicated and esoteric systems and processes. You are optionally buying into all of this. So when I see all of this outrage from people on Twitter pointing fingers in every direction but their own, it all just seems a bit naive. I fully understand that we live in a day and age where we're quick to agree to the terms and conditions of whatever service we may be using. We place faith in the idea that someone somewhere must have ensured that this service is safe to use. But you just can't do that with crypto. I often say that most people shouldn't invest in individual company stocks stocks because most people aren't willing to put in the research that's required to do it sensibly. The same thing applies to crypto. 99.9% of people should not be putting their money into crypto because they're not willing to do the necessary research to understand the true risk involved. That's before we even talk about crypto itself being a totally unsuitable and nonsensical investment choice for the vast majority of the population. Anyone who has watched any of my videos will know that I have never invested in cryptocurrency for very rational reasons. You can't place a fair price on it because it doesn't produce anything. Therefore, in my eyes, it's not suitable for investing purposes. It may be suitable for gambling purposes, but not investing. It blows my mind how quick people are to put their money in crypto despite repeated cataclysmic losses. But many of those same people won't even give stock market investing a chance, despite the fact that there has never been a period of time longer than 14 years where the US stock market has lost money for investors. And this goes back to what we were talking about in a recent video with regards to the investor's mindset and how important it is to have both your expectations and emotions in check. Too many people are putting money into crypto with the expectation that they're going to make a lot of money very quickly, and they're making such decisions on the basis of FOMO, or fear of missing out. This is the complete opposite mindset of what's required to be a successful investor. Not overnight, but over 30 to 40 years, which is what matters most. Anyone who understands the basics of finance will know that if there's an expectation for high returns, there must also be an equal expectation for high risk. And the biggest problem I see with so-called crypto investors at the moment is that everybody is buying into the reward but ignoring the risk. We also have to talk about institutional investors here because there are some very real questions that need answering. FTX was valued at $32 billion in January 2022, and that valuation was supported by money raised from the likes of BlackRock and SoftBank. We're talking about the biggest investment managers in the world placing a $32 billion valuation on a company that is now worth nothing just 11 months later. That is incredibly bad judgment on the part of the investment managers. Where was the due diligence? Surely there was some degree of concern over how FTX was managing its risk. Even if there wasn't at the time, surely FTX investors would have been in the loop with regards to how the company was dealing with the crypto price collapse. I fully accept that the crypto market was in a much worse place prior to the collapse of FTX than it was at the beginning of the year, and that has put stress on many companies. But I just find it very hard to believe that questions weren't being raised about this long before the collapse happened. Regardless, a big point to make here is that institutional involvement in the crypto space does not serve as total validation for the space itself. What I mean by that is that just because BlackRock is throwing money at these companies, that doesn't mean that the companies themselves or even the industry itself is of high quality. BlackRock just wants to make money, and lots of it. I remember when institutional money first started flowing into Bitcoin during the pandemic bull market, and everyone was saying that that was the turning point for crypto. Specifically, I remember that certain pension funds were starting to allocate member contributions towards Bitcoin. However, what people fail to understand is that these institutional investors are the same institutional investors who provide worse returns over 20 to 30 years as compared to the S&P 500 index. This has nothing to do with the capability of professional investment managers. These are, for the most part, very smart and capable individuals, but rather we know from the data that it's just not possible to actively pick the best performing investments consistently for decades. And because of that, you're much better off just owning the entire market. So just because something gets validation from the big dogs, that doesn't make it a good investment long term. And that especially applies to crypto. Speaking of validation from the big dogs, let's talk about finance YouTubers. There has been a lot of attention on Graham Stefan, Andre Gic, and me Kevin since the collapse of FTX. Reason being, all of these YouTubers who have millions of subscribers between them actively promoted FTX on their channel to their viewers. In other words, hundreds of thousands of people likely signed up to FTX and deposited their money on the platform because of the promotion that these YouTubers were running. We won't beat around the bush. These guys got paid a ton of money to promote FTX, and now that FTX is collapsing, they are running with tails tucked. I have mentioned many times on the channel that you need to be very careful taking advice from finance YouTubers, because at the end of the day, you take full responsibility for any decisions you make on the back of videos that you watch online. The unfortunate reality of our online society is that validation comes from how many followers and viewers you have. And while that might be a sign of quality in other YouTube genres, it doesn't always apply when it comes to finance. High quality, trustworthy, and reliable finance creators have the following characteristics. Number one, they have practical experience working in the financial sector, ideally in whatever sector they're making videos about. Number 2, they are professionally qualified from an educational standpoint in one or more areas, i.e. accountancy, taxation, or financial advice. Number 3, and arguably most important, they are consistent with their message, and their message is backed up by their practical experience and professional qualifications. Any finance creator who doesn't meet these standards is just an entertainer, and their content should be treated as entertainment and entertainment alone. People like Richard from The Plain Bagel, Ben from Common Sense Investing, and Adam from In the Money. These are all creators who have the knowledge and experience to back up what they're saying. Even myself. I spent 4 years working in the investment sector and have 3 separate professional qualifications in accounting, tax, and financial advice. But it's up to you to make sure that the person that you're listening to is qualified to be talking about the subject matter and that they have your best interests in mind. If you don't, then you only have yourself to blame. To wrap this up, I think 99.9% of people will be better off just getting out of crypto, swapping over to long-term stock market investing, and moving on. If at this stage you still aren't convinced that this industry is unstable, unreliable, and unpredictable, then I don't know what to tell you. But what I do know is that crypto as an investment is unsuitable for the vast majority of the population. Don't get me wrong, I want blockchain technology to succeed as much as the next person. But frankly, I don't care about any of it when we're talking about real people losing a lot of money that they likely can't afford to lose. That's my thoughts on the FTX collapse. Let me know your thoughts in the comment section, and I'll see you next time.